discussion about leveraging a decline in the cattle inventory. And it's something that's obviously very pertinent right now. I know there's a lot of discussion going on in the industry about it. So let me kind of show you what I'm going to focus on today. So this is kind of where we're going. We're going to talk a little bit about the cattle cycle. Then we're going to talk about some parallels I'm seeing in the cattle cycle right now, and a lot of people are seeing. We're going to talk about some additional factors to consider as we talk about where that positioning might lead. And then we're going to talk about some actionable items too. That's really the leveraging yourself as this inventory declines. And then we'll just kind of recap and talk about our take-home message. So first, my disclaimer here is I am not naive that I am an expert here and that this is all going to be applicable to everyone who watches this. But my goal here is just to get you thinking outside the box, or as I say here, thinking outside the corral. Okay, Benjamin Franklin is often attributed with saying insanity is doing the same thing over and over and expecting a different outcome. So my goal is just to help you start the thinking process of some ways that your operation can prepare itself for what I think is coming down the road. So the cattle cycle, let's talk a little bit about the cattle cycle. I found this graphic, I really liked it. I liked the way it showed how the numbers interact with the prices, and I just think it was a really good illustration. So they call the cattle cycle a 10-year cycle. Dr. Daryl Peel from Oklahoma State says it's really averages more about 12.8 years. And since 1890, which is when they kind of say the cattle cycle started, we've seen 12 peaks and 11 troughs. And obviously we're coming into a trough now that will lead to another peak down the road, I'm sure. So as you can see here, as we need to destock, harvest numbers kind of increase or they decrease as we're trying to losing numbers. You know, as your harvest decreases because your numbers are going down, your cattle prices obviously are going to go up. And anyway, you can just see how they all interact. I like how we named it here: rebuilding, exhaustion, sell-off, and last stage. So right now we're in the sell-off stage. And so you can see we would expect some shifts in the market coming soon. So that's kind of what's driving some of the theories we're going to talk about. So now let's talk a little bit about some parallels I'm seeing and a lot of other people are seeing in the markets right now and in the cattle inventory and the cattle cycle. So if you look at this dark blue line and where it interacts with this kind of green dotted line, and hopefully you can see that okay. So the dark blue line is kind of our current trends since 2014, and the dotted line is what the trend was from 2004 to 2014. Now, I'm sure most of you realize when we talk about the last peak in the cattle cycle, we're talking about the high prices we saw in 14, 15, and the record sell-offs we saw kind of in that 2011 range from the drought conditions then. Well, as you can see, if we start looking at the more recent trending, we are trending, our cattle inventory is trending just almost parallel with, or right with the trends from 2004 to 2014. So keep that in mind. This is what we're talking about. There are parallels to what happened before, so let's make sure we're learning from the past. Here's some numbers kind of to think about. So we're talking about the inventory again. In 2011, the cattle inventory was approximately 31 million head. By 2014, it was down to 29 million head. These are just kind of estimates based off some graphs. Well, so in 2019, we had about 31.5 million. By the end of 22, we're expecting to be about 30 million. And some 2023 estimates are that we're going to be down to 29 million head by then, as the culling and sell-off continues. So again, we're talking parallels. These are very similar numbers to what we were looking at in 2011-14, and we're doing the same thing now in the cattle cycle and the sell-off and the inventory. Here's some other parallels I think that we should kind of talk about. So I went a little further back on this one because what we want to emphasize here is the ramp up of the culling of breeding cows. So in 2008, we were culling on average about 10.5% of the total inventory. And by 2011, it was up to 12.2. Now, even before 2008, it was lower. We're just talking about kind of the last few years of that ramp up. Well, as you can see, by 2015, when we all had super high calf prices because of low inventory, we were only culling about 7.8% of the total inventory. So now we jump down to our 2019 to 22 numbers. In 2019, we were culling about 10%. And by the end of 2022 into 2023, they're projecting that we'll be about 13% of total inventory culled or more. So that's going to be an even sharper cull than in the years past. So again, parallels now to what was going on last time we saw a peak in cattle prices. So now we need to talk about some additional factors to consider, okay? And some of these, they kind of affect our theories on both sides of the spectrum. So drought conditions, right? How long will they last and for how much of the country? Drought will be detrimental to the rebuild process. So this could very easily help prolong some of the up markets if we don't see our rebuild coming as quick as possible. But by the same token, it could also help prolong our sell-off because the drought may ask most producers to keep selling off their cattle. I don't anticipate that happening. My prediction is that most producers at this point in time, with the percent of the country that has seen drought conditions this year, my prediction is most producers, unless they lose leases due to drought, have culled as deep as they probably will. So drought conditions, though, how long and for how much of the country these last will definitely be a factor to consider as we talk about what happens with the cattle cycle. I don't dare make any projections on this because I'm not a weatherman, and weathermen are nice and wrong 50% of the time anyway. So another thing to consider, our export market is significantly stronger now than it was in 11, 14, 15 when we saw the high prices. So that those high prices we saw based on the sell-off, or as a result of the sell-off, really are going to have more strength now. They weren't supported by this China export. So some numbers to see here. China has increased from 11.5 to 19.5% of U.S. export market share since 2016. And that's when China lifted the ban on U.S. beef. And so we have steadily increased our export there. We had a decent China export before, it just all went through Hong Kong. So if you look at that, you'll see some of the Hong Kong share has diminished. And now most people put those together. But just some numbers wise, we more than doubled our exports from 16 to 2020. So to me, this is a boon. This is good, but we can't rely on it. But what this says to me is, as the cattle inventory does its thing, and as we see associated calf prices, with barring any unforeseen circumstances, I think we're going to see stronger, a better strength to that higher market is what I'm hoping. As we have stronger exports, we can hopefully hold on to those prices a little longer than we did last time. Another factor to consider is there's new packing plants coming on board. I'm still a little bit on the fence on my own opinion as to whether this is really good or really bad. It's probably a little bit of both. So some things to think about: will added capacity increase competition for cattle? And will that allow producers, in particular our cow-calf producers, hopefully in trickle down, to negotiate prices a little stronger? Obviously, market economics would state that if there's more people and buying for cattle, that better prices will come. However, there is some concern about saturation of the packer market. And so, we'll see if that happens and how that can affect things. The last thing I want to bring up here is, will more packing plants, especially USDA packing inspected plants, provide more direct-to-consumer marketing for our producers? And I was at the King Ranch Symposium a couple weeks ago, and we were on a panel of producers. And I know that the question was raised whether they felt that this direct-to-consumer market that we saw kind of ramp up or pick up a little more during COVID, if it's going to continue. And some of them were of the opinion of no, it won't. I have an opposite opinion. I think that it will. I think that we're going to see this this direct-to-consumer market continue to be an avenue that more producers use, and especially if we can get more USDA inspected plants that enable us to do more retail sales. If you get on social media, you can find a bunch of ranches all over the country that are doing this. I think it's great. It's something to consider as we get more of these packing plants online, and we can get better volume and less wait times. And naturally, we need to consider this factor: input costs. So our cow-calf costs our producers are seeing higher fuel costs, equipment costs, supply costs, hay costs, right? So the consideration here is maybe even if calf prices do go up, we may not be seeing our profit margin go up necessarily. I would hope that's not the case, but right now what we're seeing is that's likely to be a contributing factor. Your cattle feeders are looking at similar input costs, but especially in the feeds area, their margins are shrinking. So again, they're going to be less willing to pay higher prices for cattle as their margin gets tighter and tighter. The question I have on this, kind of in our thinking outside the box vein, is there any chance of this trickling up or down? When are we as cow-calf producers going to feel confident in waiting on pricing? So if the grain producers can keep their grains in the silo for a year if they want to, when can we as producers try and figure out maybe how to do that? And I'm not saying you should, and I'm not saying I have an answer. I'm just saying, as we see our input costs go up, we're one of the only industries where the price we get as a factory doesn't relate to our cost of production. And there's a lot of factors associated with that, but something to consider if you've got some backgrounding pastures or the money makes sense. Some retained ownership allows some of this. Just some thoughts. And again, can producers start to negotiate price? Again, I'd like to see that start happening. I don't know that it's overly possible right now, but as we start seeing shifts in inventory demand, I don't anticipate changing very much. And so I'm thinking that producers who want to start pushing their weight a little bit might be able to. And I recognize that that's maybe, I don't know, I think controversial is the word, but a little outside the box, just something to think about. So those are kind of our additional items to my caveats to the discussion of the cattle inventory. So now I want to talk about actionable items. And I recognize that some of these are a little late to the party. A lot of producers have culled pretty heavy this year if they didn't last year. So I recognize that some of these decisions might be too late for you to make, but some of them aren't. So we're going to talk about a methodical culling process, a tiered culling schedule. We're going to talk about retention of females naturally, total volume and numbers on your property, and then financial records and budgeting. So first, I want to talk about methodical culling. Now, so often, culling has to happen in a convenient manner. And that is really, in some ways, is the nature of our operations. But the process of culling should probably be thought out a little beforehand. So I want to talk about a culling schedule, and in particular, a tiered culling schedule. So you'll see here, this is a culling schedule that I discussed with a large kind of multifaceted ranch. You can see they have a very integral operation. They have their cow-calf operation. They have their purchase stockers. They have retained stockers. They raise their own replacements. So this is a very involved tiered culling schedule. For producers who just have, a cow-calf operation and no other diversification, this is going to look different, but it should still be well thought out. So you can see the first thing that they're going to do is they're going to cull all their open and dry cows. And they didn't care what age they were. That's what they were going to cull, open and dry cows. The second thing they were going to cull was their purchase stockers. Even if they had to lose some money on them, they figured that they would rather save the grass for their breeding females. Third is their raised stockers. And then they started looking at retained heifers, early wean calves, and then producing cattle. So the key is think about it and kind of decide what works best for you and your economics on your ranch, right? So they were more willing to take a hit on their stockers than to lose breeding cows who would provide revenue year over year. The second point here, identify trigger points. This is really important. So identify at which point you think you need to cull. And the point of this is to be ahead of the curve, right? I've talked a little bit about something called forage budgeting. I learned it in my grad program. Dr. Jason Sawyer from Texas A&M, who's now with the King Ranch Institute and East Foundation, he helped introduce me to this. And basically the idea is you go into the year with the information you have, making certain assumptions about your pastures, your time on pastures, your forage production. And then as you go throughout the year, you monitor what's actually happening on the ground and you adjust accordingly. For this ranch I was working with, their trigger points identified were associated with rainfall because they had a pretty close correlation in a shorter term, 2-3 months of forage production to rainfall. So if they knew that their fall rains came in light, they were starting to look at trigger points to start the culling process. The third here is to consider operations and timing. And that point is, when are your cows going to be accessible? Again, the whole point is to stay ahead of the curve. So if you are going from your permit to private or private to permit, and you have to go through some corrals, you know that you're going to have an opportunity to sort and cull if you want to. Maybe sort off things you might cull and keep them at a closer pasture. Too many times, we find ourselves needing to sell cows and they're out on our large landscapes, and that's very difficult to manage. So consider operations in your timing, Another thing to consider in timing is some of these cull cows, when everyone is culling, it can be kind of a saturated market. So do you have the ability to hold these over to a better sell time, market time? And in particular, that might be in the fall for the North countries, the southern states have a little more flexibility as to when cows fluctuate in their cull pricing. But just think about it and find a way that you can do this that works for your operation, but keeps you ahead of necessity. And then the last one is avoid emotional decision making. And I know that probably seems like kind of a no-brainer, but too many times we realize we're out of pasture, or our federal representative, our BLM guy, our Forest Service guy are knocking down the door telling us that we got to be off in 2 weeks or whatever it might be. And we have to make a decision at that time in the stress of the moment. And inevitably, it's probably not going to be the same decision unless you have a plan in place as you would have made had you had some time to think about it. So being ahead of the curve on your culling process, your destocking can help you avoid that decision making. So that's one thing I think that every operation should implement. The other is keep females if possible. And again, I understand that this is kind of a no-brainer, but let me kind of explain some of my theories behind it. So first of all, keep females that are having a calf, right? Don't keep just any female. Keep females that are producing. This will help you as the cattle cycle continues. We are going to see really elevated replacement costs in the next 2 to 3 years, if not next year. So this will help you avoid those high replacement costs down the road. You don't want to be in expansion phase over the next 3 to 5 years because it's going to cost you a lot. I had a friend of mine, and he bought like 200 replacement heifers at $2,400 a unit. And I think it was 15 or 16, early 16. And 2 years later, those cows couldn't pay their note with their own calves, right? That we want to avoid that as we come into what the inevitable next few years are going to look like for replacement costs. The other thing to consider too, and this seems a little counterintuitive, but if you can keep your breeding females in a couple of years when other people are buying pairs for insane amounts of money, you will have a marketable product. And something to consider is selling a large portion of your herd at that point, and then waiting for the expansion to kind of slow down and prices to come down. And then especially if you're interested in increasing numbers, it may provide an opportunity to do that. Now, I recognize, again, this is operational dependent. I recognize that there are operations that wouldn't survive without the continued cash flow of calf sales if they destock at a large rate. But think about it. Again, we're just trying to think outside the box. If you can hold on to your females, you're going to avoid replacement costs, and you're going to have an in-demand product in a couple years. I love, again, Dr. Darrell Peel from Oklahoma State said at the King Ranch Institute Symposium, he said, every heifer upright with a constant temperature will be a replacement for someone somewhere. And I think that's probably going to be true. He's projecting, 2023 to 2026 is when we really start seeing this. Barring, again, some of those additional factors contributing, I think that he's probably about right. And then in general, try to keep your numbers up. Again, I recognize this is a little bit late to the party with most of our producers having culled pretty heavy, but keep your numbers up if you can. Fertile breeding females. This will allow for you to have a higher number calf crop when these calf prices are high. You don't want to be trying to expand to capture that market. You want to be in a position to capture that market. But don't keep your numbers at the detriment of your pastures. There's been lots and lots of studies about the long-term detriment to overgrazing, overutilization of forage. So there's a lot of ways we can look at keeping our numbers up. We can find additional grazing, obviously, that goes without saying, but what does that look like? Well, cover crops. Is there crop stubbles that you can throw cows on that maybe you haven't thought about before? Additional leases, obviously, you can find. But again, you've got to be ahead of the curve on this. You can't just start racing everyone to these things come fall when you had to leave your fall pasture early. I do want to say here, a lot of people hear cover crops. They think of warmer climates, eastern climates. I'm based out of Idaho. I've got a guy just down the road who plants cover crops every year. He puts his cows on them when they come off of his permits, and they graze those cover crops well into winter. So it's definitely possible in multiple areas. Granted, some of the dry ground in the Intermountain West will struggle a little bit with cover crops, but I still think there's varieties that can be considered. So keep your numbers up if you can. My main goal here is so that you have good calf numbers when these prices are high. That will enable you to capture the market without being worried about expansion. Next, we're going to talk about financial records and budgeting. And this is one I'm going to harp on a little bit. If you don't have good financial records, get them in order. You cannot leverage what's happening and what I think is going to happen in the market moving forward if you don't know where you're at financially. Because again, you'll see as we go on, you need good records so you can identify your financial strengths and weaknesses, okay? If you don't know your financial strength and weaknesses, you can't make a plan. You need to know your break even. So as you're negotiating on these calves, if we as cow-calf producers want to be able to start having more control over the price we receive, we at least need to know what it costs, okay? So if you don't have a good financial record, get them in order. Then you can do a kind of a SWOT analysis of your operation and its finances. Make sure you know your break even. Then make a plan. And what that means is we're all expecting well over $2 calves in the not so distant future. Most likely, barring any outside influences, which is we've learned over the last few years, could be any random thing. But put together a plan. Look at your operation, look at your financial strength and weaknesses. Are you high leveraged? Do you have a lot of operating debt? Maybe that needs to go on your first plan, is to pay down that operating debt. If we make a plan as producers, I think that because I'm projecting a little longer high in the market this time than just a couple years like we had last time, not much. I mean, it still won't last forever, but maybe 2 more years than it did last time. So we might see a 3 or 4 year high in the market. I think you can position yourself to come out of the cattle cycle really looking ahead and really looking good from an operations standpoint to be able to continue on ranching in a better position. And then the last one here is somewhat a joke, but kind of not, because when you start seeing these stronger calf prices, watch out for your accountant, okay? They're going to come to you and say, you're making too much money, go buy a pickup. Well, for heaven's sake, if you don't need a pickup, don't go buy a pickup, okay? If you have that plan in place, then you will have better decision making about what to do with this expanded revenue that we're all hoping to see here pretty soon. So really, financial records are a really important piece of this puzzle. So please, I have contacts that can help you do this. You probably have kids that can help you do this. If you don't have good financial records, I can help you do this. Let's get them pulled together and get yourself in a position where you can see your operation, really see your operation, okay? So the shoebox file is no more, or leastwise needs to be gone through quarterly. Okay, so let's talk a little bit about our take-home message from my presentation today. So I think we're posed to repeat 2014-16, high in the market. I anticipate, based off of some of those additional factors we talked about, I am hopeful and anticipate that this high will maybe be a little more gradual up and maybe stay high a little longer. So if you can position yourself to take advantage of that, do so. Now, it still won't last. Market economics will always push herd expansion. Supply will go up. Again, with multiple packing plants and a strong export market, it doesn't look like consumer spending on beef is going anywhere. Then, it may last a little longer, but I don't think we just can't help ourselves. When prices are high, we retain heifers. So it won't last long. So prepare now, both operationally and financially, to take advantage of this high in the market. Be prepared to do infrastructure repair, pay down debts first, buy more pasture, acquire more leases, get yourself in a position where you can really take these revenues that are coming and use them methodically and to your long-term benefit, right? Don't be too excited and go buy a fancy stud horse or whatever it might be, that brand new side by side, unless it's integral to your operation and you need it and it's part of your long-term plan. In that case, go ahead. Although you have to call me and talk to me about the stud horse. Okay, another 3 points in our take-home message: set aside emotion and habit to consider options that are outside the corral. Okay, again, we need to learn from what we saw last time we saw a significant high in the market. We need to think outside of, I don't want to call it tradition, because tradition is part of why we do what we do. So we'll call it habits. There's traditions and there's habits. And consider the way your operation has been running and ways that you can adjust these operations. Okay. If you make a good plan and be prepared and you're ahead of the curve and you're thinking about it, I think you can set yourself up for future success. And we really have learned the last little while that markets are even more risky than they used to be. The global nature of our cattle market is not going to change. Factors that 20, 30, 40 years ago wouldn't have affected the US cattle market as much as they do now are. So have a risk management strategy in place. Now, this can look like a number of things. Red Summit Advisors, we sell pasture, range, land, and forage insurance. We sell livestock risk protection. We have a lot of insurance products. Now, they don't work for every operation, but if you're dry and you're trying to keep your numbers up and you have a quality pasture, range, land, forage program, or take advantage of the public programs for drought conditions, you, or both for that matter, because you can do both, you will be better positioned to keep your numbers up. You'll be able to buy pasture, you'll be able, or at least pasture, you'll be able to buy forage, okay? Again, also, livestock risk protection gives us a little more power in our market price. It helps us protect. It's like a hedge, but without the upside problems. You still get your upside, but you protect your bottom side. So anyway, the point is, consider having a risk management strategy in case, and know that a risk management strategy is more than just products and insurance. It's also discussions about operations and changes that could be made there. It's discussions about intellectual property. How are we passing along the knowledge of the operation and things like that. So kind of along that vein, as we finish up here, this is our risk management website. It's the link. You can get on there and kind of learn about me and what I can do for you as from a risk management standpoint. That's my email and my phone number. You're welcome to call me and discuss any concerns or questions you have. I love talking to people. It's one of my favorite things about my job is to be able to talk to ranchers and folks and just discuss what's going on. So you're welcome to jot that down and get a hold of me or visit our website. And again, don't be afraid of that Red Summit website and the risk management page, because it really explains that risk management is more than just selling you insurance. That's my job, is to provide a free service to help you identify and manage your risk. And that in the near future, I think is going to circle or encompass this idea of preparing yourselves for these higher calf prices that I think are coming. So that is all kind of I have to share with you today. You're welcome, if you have a question or two, to throw them in the chat box, or if you can unmute yourself, you're welcome to ask questions. I can We can debate some stuff if you want. Otherwise, just a short and sweet 30-minute presentation for you there on some things and some thought processes to help you sort of leverage this decline in the cattle market and the inevitable higher calf prices that I see coming down the road. So if you have any questions, go ahead. If you got somewhere to be, you can hop off. And I know a lot of us are fighting cold weather and snow right now, and probably out worrying about calves. I just saw that North Dakota in particular is going to have some record lows, sounds like, today, which is saying something for North Dakota. I'll hang out for 5 or 10 minutes just to make sure there's no questions. I hope this was helpful to everybody. It's just, again, like I said, trying to get everybody to think a little differently than normal and see how they can see the gold lining the silver lining to this kind of cloud of this destocking and drought. All right. It looks like most everybody jumped off, and if the last few of you don't have any questions, I'll give you just a minute if you want to ask something. Otherwise, I'll go ahead and we'll shut her down. All right, I'll sign off then.